equity, mate.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.
Equity.
There is no hotter conversation than the Australian housing market, and boy, do we have an interview today. Welcome back to another episode of Equity Mates Investing Podcast, a podcast that follows our journey of investing. And whether you're an absolute beginner or approaching Warren Buffett status, our aim is to help break down your barriers from beginning to dividend. Now, if you've joined us for the very first time, a huge welcome. If you're getting up to speed with the basics, you can check out our Get Started Investing podcast. But otherwise, my name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Good to be here. This was a red-hot interview on a red-hot topic in the Equity Mates community, the price of a house.
The price of a house, that's it. We were fortunate enough to have, at last minute, Matt Barrie, founder and CEO of Freelancer Limited, in the studio, ripping through off the back of a presentation keynote speech at the Sydney Morning Herald's Sydney 2050 Summit. He came in to give us his thoughts on the housing market, why it's so hot, and where it's going to go from here.
So Matt Barrie, if people aren't familiar with his writing, he's never been one to shy away from sharing his view on Sydney. He wrote quite a notable piece when the lockout laws first happened back in 2014 that did the rounds, and this keynote speech, I read the whole thing. We'll include the link to it in the show notes. It's incredibly well researched, and it's incredibly scathing on Sydney and Australia. So we had to get Matt in to ask him to give us the central thesis.
It is a fascinating interview. Cannot wait to crack into it. But we are approaching tax time, and just a reminder that you don't actually have to sit around and fiddle through all your spreadsheets and figure out when you bought, when you sold, what your capital gains are. There is an easier way, and that is through Sharesight. It's a platform that I use to manage my portfolio and track my performance. There is a link in the show notes, sharesight.com/equitymates, for you to sign up. Now, if you have less than 10 holdings, it's free to sign up. You can plug in all of your holdings and get great performance tracking of your portfolio and tax reporting. If you have over 10 holdings, there is an annual premium. The good news is with our link, you'll get 4 months for free if you sign up to the premium plan. So just jump into the show notes, use our link, and be smarter at tax time with Sharesight. But Ren, without further ado, this is an epic interview, one that we really enjoyed. A lot of energy, a lot of insight, well-researched, as you said. Let's get stuck in. Well, Matt Barrie, welcome to Equity Mates.
Thanks for having me, guys.
Now, we're going to cover two big topics, Australian housing and AI. This is going to be an absolutely jam-packed episode. Cannot wait to get through this. But Matt, you recently delivered the opening keynote for the Sydney Morning Herald's Sydney 2050 Summit, and the keynote was titled The Great Australian Scream. Now, before we get to the housing points, let's start with how much Sydney and also Australia have really changed over the last 20 years. Can you kind of help us get some context?
Well, I'm not sure how old your listeners are, but I'm getting there. And in the 2000s, let me tell you, year 2000, we had the Sydney Olympics, and the city was alive. It was electric. In the lead up to the games, everyone was so excited. We're emerging as an international city. The nightlife was, I think, the best in the world. You go out anywhere, any day of the week, you had things on. It was just so exciting. We won Best City in the World awards in many different categories and so forth. And just over the last 20 years, we've really stuffed it up in a big way. I mean, that's basically the kind of my opening keynote in a way for City 2050.
Really set the tone.
I mean, it's the greatest city in the world in many regards. You've got the people, you've got the weather, the beaches, the lifestyle. It's fantastic, but it feels like you're playing a video game on maximum difficulty sometimes. You rock up to your favorite restaurant. Oh, it's closed down forever, right? Oh, wow, I want to buy a house. Okay, let's do the math on this. Doesn't really work out, or what have you. So it's just, lots of great things going for the city, but we've got a real scenario right now.
I want to go out past 1 a.m. Can't do it.
Yeah, like why can't I get a meal after 9 p.m?
Yeah.
It's not hard. Why is my beer now cost $14 down the pub? I was at the the sheaf earlier in the week, just trying to get a steak for dinner. At $70 was the price for a special.
Yeah,
the special.
A special.
The special was $70, right? So pub at the steak at the pub index is climbing very rapidly. It's great, a lot higher than 7% CPI. I think it's running at about 100% year at the moment.
That's ridiculous.
Yeah.
And you really used that setup, how much Sydney has changed, to lead into the cost of living crisis, but really the housing crisis. And you had some fascinating, stats and numbers around just how bad it is. Can you talk us through the state of Australia's housing market?
Well, I mean, the root of all evil in this country is the astronomical price of housing. And that permeates. Once you understand that, and you understand that all, the ramifications of that in terms of costs and wages and so on, it really is the problem that's the root of all problems, in this country. Socioeconomists say that if the average or median house is divided by the median household income is 3 times or less, housing is affordable, and that's like our parents used to say back in 1982, I bought a house for 3 times my income, right? Yeah. Between 3 and 4 times, it's unaffordable. 4 and 5 times, it's severely unaffordable, and 5 times or greater, astronomically unaffordable. Sydney at the moment is 13.3 times, right? And it's the second most expensive housing market in the world outside of Hong Kong, which is a nice, attractive little island that's extremely dense, very small, next to the most populous nation in the world. So why would Australia, a relative backwater, 10 to 20 hours by air from really any major action around the world, have the most expensive housing in the world outside of Hong Kong?
Great beaches.
Well, there are great beaches other places.
Good steaks.
No, exactly. But you got to wonder why. Well, it's not because we're making any more babies. So every female on the planet needs to have 2.1 children to maintain the population. Australia is about 1.5, 1.6, and in fact hasn't been above 2.1 since 1975. And wages are not going up at the rate that housing's going up. In fact, at the moment, wages are in the greatest decline in real terms, purchasing power terms, ever. And in fact, for 20 to 24-year-olds in the last year, the real purchasing power of wages went back to 2008.
Wow.
Now, the price of everything else didn't. So what's going on? Like, why does Australia have some of the most expensive housing in the world? Sydney is the second most expensive. Australia, pretty much all the major capital city markets, including places like the Gold Coast, Winkarabee, and so forth, they're all in like the top 20 or so in the International Housing Survey by Demographia. So why?
Well, why?
Well, the answer is because the successive Australian governments, for the last 61 years, Australian house prices have gone up 86 times, right, in 61 years. And the reason why is because politicians have chosen a path of easy, relentless growth rather than talking to the engineers, the scientists, and the entrepreneurs about what to do to grow the economy and actually build a diversified and strong and complex and sophisticated economy. And instead, they've chosen to go the easy, relentless path of growth, and that is by pumping the housing market to the mother of all bubbles. And when I mean the mother of all bubbles, it is the mother of all bubbles, right? In 2008, in the global financial crisis in the United States, Australians were already twice as indebted to housing than the Americans. And the Australian banks were twice as exposed to residential mortgages as the US banks, 3 times the British banks, and 4 times the Hong Kong banks. And Hong Kong has got the most expensive property market in the world. So what they've done is just successive policy after policy after the policy of, well, how do we run the economy? Well, what do we do in the economy? We export dirt, dead trees, right?
Yeah.
And now gas from those dead trees and gold, right? So the dirt being iron ore, going to China to build apartments in a big construction boom to pump their GDP in some places, cities that don't get lived in, right? Coal to China to burn to make that steel. to build those apartments, and to Japan in the wake of Fukushima when they shut down the nuclear reactors, although those nuclear reactors are coming back online, although coal's needed everywhere now. And we've been lucky until recently. And then gold, because central banks around the world keep printing money, so the gold every year goes up about 9%. I mean, if you want something to invest in, just buy gold. 9% every year, just about every currency in the world, because central banks can't help themselves but to print money, which is effectively another form of taxation. And then gas, because you need to power energy, right? What we have done for this easy, relentless growth is to have one of the world's leading, and by flip side of that, insane immigration programs. So we bring a lot of people into this country, an astronomical number of people in this country, to the point where now in New South Wales, for example, I think the stats are currently that 33% of people have both their parents born here, and I think 43% have both parents born overseas.
Wow.
Right?
Wow.
It's and the country is something like 30% of people in the country were born overseas, and I think in New South Wales it's 35%. Right, so it's a huge program. In New South Wales, we're a population of only 8 million. 730,000 people are brought in last year. 730,000, population of 8 million. 450,000 moved out because it's too expensive to live here, mostly to Queensland or the country, and some overseas. And they're doing that because it keeps house prices up. The more people you've got in a certain area, the more the house prices stay up and go up. And the path of easy, relentless growth that the governments have had is to keep blowing up the biggest bubble you can possibly blow. And now we're at the point where it is insane. I think, was it yesterday in the paper or today? There's a dog box out in Erskineville for $4 million.
Yeah, I saw
right.
that.
I mean, how does that make any sense? At $1.2 million, which was the median household price, a couple of months ago, it's mathematically impossible to pay off with the median household income.
I think the crazy thing with that as well, if we're looking at the same one, only 2 years ago it was bought for $2 million.
Yes.
So it's up. They've cleared over $2 million, excluding tax, of course, $2 million in 2 years. In Erskineville.
It doesn't make any sense. Mathematically, it doesn't make any sense. Like, I'm sure it was Erskineville or something like Marrickville or something like that. But what's a good wage? I mean, the median wage is about $94,000 a year, where your take home is about $5,900 a month, right, after tax, on a $1.2 million mortgage. At the current rates, I think it's close to $7,000.
It's over $7,000.
Yeah,
Yeah,
7,000.
right.
You've got a problem when Suicide Prevention Australia is doing a media event outside the Reserve Bank of Australia about interest rates.
That's crazy.
Yeah, that's
Right, because they said today that 40% of Australians in the last 12 months know someone that's killed themselves. Right, you've got a problem when the suicide prevention, non-profit is out the front of the Reserve Bank.
Yeah,
Doing a media.
Without, I want to jump. We'll probably jump into the politics in a moment. But
Yeah.
so I'm going through this process right now, and getting more and more turned off as the process continues around buying a house and having these sort of conversations. And it all started for us when we went, and we've spoken about this on the show, when you go to the bank themselves and they just look at your income and just times it by 5 and go, that's what you can borrow. There's no true serviceability on that. Can you afford it from a cash flow point of view? It's just like an immediate, wow, whopping, here's your cash, go for it. And so people are just put in these situations where they're over leveraging like crazy, because the banks are just, I feel like just giving money where money's not necessarily due, in a way, if that makes sense.
There's so many aspects to that, right? The first is just the extreme amount of exposure that the banks have to residential mortgages. So the Commonwealth Bank of Australia, for example, $639 billion of residential mortgages, $150 billion of business debt, and about $17 billion of consumer finance. You would probably be surprised to know that Commonwealth Bank has a bigger market capitalisation than Goldman Sachs.
Yeah, it's crazy.
Right? Something a bit Australian Bank, Goldman Sachs, something a bit strange about that. Australia is also rated by Transparency International as the worst property laundering market in the world.
Really?
In the world, because you can buy a house in Australia and the real estate agents and anyone involved in the property transaction don't KYC you. They don't check your ID to find out who's actually purchasing the house, or who the ultimate beneficial holder is of a trust and what have you, right? And then the funny thing about that is, at the moment, the Chinese have been a little bit in reverse, but they've been a big driver of house prices, obviously coming in, going to university, student visas, and then buying houses. It's illegal in China to send money more than $50,000 a year US overseas. It has been for a long time. It's also illegal to own property overseas. Yet, strangely, from Auckland to Vancouver, there seems to be a lot of houses being bought, right? So that has been a big stimulus of the housing market. The banks have gorged themselves on it. We've got a nice little flywheel that's been set up with the banks, whereby we've got superannuation, and superannuation is one of the things that's really driven GDP per capita wealth in this country. Australia is a relatively wealthy nation, although that's going to rapidly deteriorate in the current circumstances. But superannuation is being a big driver of that. But the flywheel is the fact that every month, I think it's like 11% now of the Australian wage bill flows into superannuation. 20-something percent of that goes, I can't remember, it's like 16%, I think, something like 16% it goes directly into property. And then there's 20-something percent going into equities, of which the big four plus Macquarie Bank are around 22% of the ASX 200. So basically, the way the math works out is every month, Australian wages, 11% go into super, and effectively 5% goes into pumping the bank stocks. And the bank market capitalizations go up. They can lend more money to, guess what, residential mortgages. And it's extreme. And they weren't checking documentation. There was a big scandal that people were supplying documents that were photoshopped and, fake degrees and this, that, the other, and they're just gorging themselves on this. And what they didn't expect was one of the greatest hiking cycles for the Federal Reserve, going from basically zero to negative interest rates to 5, and that caught everyone by surprise. It also caught the Reserve Bank by surprise. They lost $50 billion on their portfolio of $500 billion of Australian government bonds. So the Reserve Bank of Australia is negative equity and effectively insolvent. If there's any other business to be insolvent.
That's all right. They can just print more, though.
Well, that's exactly their argument, is they can print more, right? So, but they're in no position to bail anything out at this point. And when only just begun. I mean, the official inflation rate's 7%, but everyone knows it's not 7%. The schooner of beer down the pub's now $13-14. In fact, they've got the smart cash registers now. You go there, buy a beer, come back 20 minutes later, the price has changed. I said, last year the price of a steak down the pub was $38, then it was $48, and then I wrote the article. Well, I wrote the article that was the speech that I just gave. Went to the pub. It was $56 for a steak. I got the pepper sauce. It was $2. It's $58. And I went to the Sheaf this week, and it was $70 for the special steak. Right? Your landlord's jacked the rent 15%.
Bryce just got a 25% increase in his rent.
25, just bang.
Energy Australia's up. What they said, 20 to 25%. Australia Post is up 10%. Like everybody knows it's not 7%.
Yeah.
Right.
It feels like there's sort of two separate conversations going on here, and it would be good if you could tie them together. One is the cost of housing, and then the second one is like the cost of everything else. Yeah. And I think in your speech you said that housing is like the original sin or something like that, and it's driving costs across the economy. Yeah. Can you help us understand how the housing cost is driving stakes and everything else?
Absolutely. Imagine you run a cafe, you run a restaurant, right? So first of all, you're paying astronomically high rent. In Australia, the average per square metre rent down Sydney City in CBD for effectively a restaurant is around $12,000 per square metre per year. In Manhattan, in New York, it's around $10,000 per square metre per year. In LA, is even cheaper. So you're paying astronomically high rent. And then on top of that, you're paying the highest casual wages in the world, which was $21.38, which just went up 5.75% this week or last week. To $23.23. So you're paying the highest casual wages in the world. You're paying astronomically high rent. And then you've got to try and find a way to sell something like a steak and actually make some money on it. And so you're being squeezed. So the cost of everything goes up. The businesses sell. And therefore, you have an inflated cost of living, right? And then it just cascades through the entire system. And it's because of land costs, right?
You had this quote that I want to read out because I thought it was so good from your speech. Cafes can't find workers because despite paying the highest casual wages in the world, locals can't make it work with the cost of living. So we import people and trick them for a while to work in a cafe before they realise they can't afford it either.
That's exactly right. I mean, 40% of migrants coming in go work in food, beverage and hospitality. And the minimum wage to come into the country, I think, was about $53,000 roughly. how do you make that? We live here, right? How do you make that work and work in a cafe, right? Like you can't live anywhere near the place you're supposed to work. I think if you look at the minimum wage, and it's a very complicated thing to figure out how much to pay someone to work in a cafe. You've got all these levels and grades. Level 1, 2, 3, 4, 5, 6. Grade 1, 2, 3, 4, 5, 6. Do you provide? Do you provide service? Do you provide advanced service? And so forth. There's 122 pay guides that tell us how to pay everyone, including the concrete industry and the asphalt industry and the funeral industry has different wages from the cemetery industry and what have you. But depending on the time of the day that the person's working, depending on whether it's a public day, a public holiday, or whether it's overtime or this, that, the other, or whether they bring a cheese grater to work or not. It's very, very complicated. So businesses have to pass those costs on, and that's why the cost of living is so high. It's just land costs and money printing during COVID has led to just rampant inflation.
If land costs and housing costs are the root of a lot of these problems, then we ask what's driving that. And it seems like there's probably three key camps that people fall into these days. The first is a housing supply problem. And the AFR, I think last week did Housing Supply Week, and, Albo's got his $10 billion Housing Future Fund. And so there's a lot of people that are camped in the we need to build more, it's a supply problem. Yeah. Then there's a conversation around migration, and the migration numbers that are coming to Australia now compared to history, just off the charts. And so there's a conversation around that, the amount of people coming into Australia, the demand side is driving it. Then there's a third camp, which you don't hear much about, which is like how we treat housing as an investable asset and the tax treatment of it. And, there was that census number that 1 in 10 houses in the 2021 census were empty. And so there's that camp. Who's right? Is there a bit of truth in all of them? Is anyone blatantly wrong? How do we sort of...
No, there's only one answer, which is migration. Okay. That's the only answer. We're bringing in a Canberra-sized population every year, and that's quite a large city, right? Yeah. Right. On the supply side, we've been gangbusters since the Sydney Olympics in 2000 in building apartment blocks. In fact, it's insane, the rate of building. We're the fourth highest in the OECD for rate of building houses, basically apartments. There's a thing called the Ryder Levitt Bucknell Index, which tracks cranes around the world and where the cranes are. There's 800, as of the last report, which is maybe a quarter old, there's 868 cranes in Australia, of which 365 are in Sydney. I think 189 in Melbourne, but 365 in Sydney. And there's 10 in New York. And there's like 14 in Chicago, I think 17 in San Francisco. So
they need to build more.
So we have all the cranes in the world here, pretty much. Outside of China. And the other thing is that we haven't been able to increase the number of construction workers and tradies for decades, right? It's barely budged. In New South Wales, the number is about 300,000. Every time the cost of living goes up, the tradies flee to Queensland, and they're fleeing twice as fast now because the Brisbane Olympics are coming and you get paid better rates to go work on that because it's a government project. So the cost goes up. The tradies flee to the country, or they flee to Queensland or somewhere overseas or what have you, Thailand to live, I don't know, anywhere cheaper, right? So we're not able to build any more houses. We've been at flat chat extreme levels for decades. And in fact, now construction firms are going insolvent. So we had 1,700 insolvencies in the last 12 months in construction. Second highest rate of insolvencies outside of food and beverage, trying to get those cafes to work. Someone comes along, does a construction project, sells the properties off the plan, gets locked into a fixed cost structure because they've sold the property off the plan. And then inflation, materials and wages just keep going up and they go bust. It's as simple as that. So it's not possible to build any higher than we're building now. And in fact, the number of housing starts is dropping like a rock because the banks won't lend anymore. The banks want to see, anecdotally, a 17 to 32% return on investment. They're up to the gills in residential mortgages, so that the lending's tightened up for developers. You can't get any more tradies, in the country, and costs are too high. So that's at its end, right? In terms of the ability to do anything there. And now interest rates might go up again today, but they're 3.85. Let me tell you, New Zealand's 5.5, UK's 4.5, Canada's 4.5. They're going up.
Yeah.
They're going
one
up.
of the major banks came out yesterday and said they expect them to hit 4.6.
Well, they're playing a game. So all the banks are playing a game because they don't want to spook anyone, right? And so the game is, well, no, I think we'll peak here, everything will be fine. And they go, just before the interest rate decision, they all come out, like ANZ came out and said, no, it's probably going to go up this time, 25 basis points, whatever. But the next one's going to be, maybe 3 months away or something rather, whatever. And then they'll pause for a bit and so forth. And then, of course, as the time comes up, they're going to raise, right? And they'll just drip feed the pain in. They're not going to say, well, it could go to 7 or more. I mean, in 82, it was 16.5 or 17. But in 1982, it took only 44% of household income to service the mortgage because house prices were a lot lower. Now it takes in Sydney 62% of household income to service the mortgage. Probably after today, it takes 68% or something rather, right? In New South Wales, 70% of people are in rental stress, which means their outflows are greater than their inflows. 86% of young families, 86% are in stress. No wonder locals aren't having more kids. It's too expensive. And then the flip side is 69% of new immigrants are also in rental stress because they don't know how expensive it is. They're told to bring in $60,000 Australian to survive on if they're a student, for example. That apparently is not getting enforced anymore. Nepal is the third biggest demographic, and the GDP per capita there is $1,200. So I don't know how they'd expect $60,000, but you're hearing these stories about international students coming in, of which we've got 620,000 of them. And in Melbourne, a survey just came out where of the 180,000 international students in Melbourne, 90,000 are in food stress. They don't have enough to eat, and there's growing demand for food banks and for free food and so forth. Yeah, we're creating a real problem. And why is the government doing this? Because they're stuck between Scylla and Charybdis. Like they're at the point now where they've pushed this Ponzi, and it's a Ponzi scheme. It's a Ponzi scheme because you need house prices to keep going up, so you've got to find some more suckers to buy house prices at even higher prices. Houses at even higher prices, and you got to just keep bringing more and more and more people in because the thing has gone so mathematically insane that it's impossible for the average person to buy the average house.
All right, Matt, we're going to take a very quick break and we'll be right back. Well, welcome back to Equity Mates. We are here with Matt Barrie, CEO and founder of Freelancer Limited. Outside of policy around immigration, though, there's other government policies, particularly here in New South Wales, around scrapping stamp duty or at a certain price, and then there's the first home buyers grant, like plenty of policies to give people more ability to spend more on housing, I guess. So, what's your thoughts, just broadly, about housing policy? Well,
in terms, if the government ever wants to restructure a tax, I guarantee you they're not going to make less money. There's always an outcome here. If you look at the New South Wales budget, they're planning to make more money off the property tax than the stamp duty. Now, in theory, property tax is better than stamp duty because stamp duty just basically leads to illiquidity. You got to pay a huge amount of money just to pay the stamp duty. And the government loves stamping things. I mean, what are they doing in return for that stamp?
Nothing.
Here's a document stamp, right? Okay, pay us some stupid number, right? Like it's a joke, right? It's an archaic way just to basically extract money from people. But yeah, it does lead to illiquidity issues. But then likewise, how they want to create this sort of two-tier property tax thing is also going to create illiquidity because some houses will be on the new regime, some will be on the old regime where you don't pay a property tax. And who wants to buy a house and continue to pay property tax when you can buy a house that doesn't have an ongoing property tax in a way? So the government's policy is basically just keep house prices up and keep them growing, or we've got a banking crisis. And the thing we're at now is, if you haven't watched the movie The Big Short with Steve Carell in it, you should watch the movie. It's a great movie. We are there's so many echoes of exactly where America was in 2007, 2008, with the global financial crisis there is now. There's a famous scene in the movie where Steve Carell's in a strip club, and the stripper's there dancing around saying she's got 5 houses and a condo, and she was on what they called in America adjustable rate mortgages. These are fixed rate mortgages that lasted 2 or 3 years on low teaser rates to get you in. That they call them exploding arms. After 2 or 3 years, the interest rate went up higher, and they doubled or tripled. And that was basically the global financial crisis in the US because all this lending went crazy. to the point where they were, as you say, you go into the bank and they don't check your documents. They don't check to see that you've got an income or assets or job or anything like that. And in America, they call them ninja loans. No income, no job, no assets. You could go just borrow money and buy a house. It's a bit different over there in the US. In many circumstances, you can just hand back the keys if you can't pay the interest bill. But basically, everyone was going crazy on houses, and then all the lending was to increasingly lower and lower quality borrowers who were unable to pay back these loans, and then the mortgages reset. And they doubled or tripled. And guess what's happening right now? So there's a lot of people were on 1.95% mortgages during COVID here in Australia, and they're now being reset. And what's a mortgage now currently?
5.5.
Try a bit higher. It's wishful thinking, looking for home. No, I mean, like you go on Twitter and you see. I mean, it's very hard in Australia to figure out what the price of anything to do with housing costs. It's the only place in the world where you need voodoo to figure out how much a house costs, right? Everywhere else, you go here's a bunch of houses for sale, here's their price.
Yeah.
In Australia, the average house price is contact agent.
Yeah.
Yeah,
right?
well, Bryce has been lamenting that every place that does have a price listed or a price range listed just gets blown out.
It's plus 20% to start.
Yeah.
Before you even speak to anyone, plus 20%.
Well, yeah, I mean, I don't think, there's this whole thing about underquoting, whatever. I don't really think the agents in many ways to blame. I mean, most of these agents don't have a brain to be that conniving, right? Like,
no, I think it's just demand, isn't it?
There was a point in time actually where I actually looked at a bunch of different houses, and I'd go in and I'd fill in a spreadsheet and I'd go, how many bedrooms, bathrooms, whatever, what price do they tell me it will sell for? And then down the track, I would follow up and see what price did it sell for. Now, in New South Wales, they're actually not required to publish the price or tell you who owns the property or anything like that. That's why Transparency International says it's such a bad market for money laundering. But in some circumstances you could get the price, what have you. And let me tell you, I looked at 50 homes and I looked at the price the agent told me and the price it sold for, and guess what the deviation was between the two of them?
You're closer to this
25%.
0.56%. They were spot on every time.
Oh, really?
I just couldn't believe it. I was like, these guys are not savants. Yeah, how is this happening? And I think what was happening is I think the software they use to manage the whole process just tells them the number, and it just ends up being that number, right? It's kind of like maybe a bit of tail wags the dog a little bit, but whatever software system they're using just tells them this is really the price, and it ends up just being the price for whatever reason. It just seemed weird to me that it was so accurate. But and then, of course, that's the software system's constantly adjusting the prices, and they're constantly changing, probably based on a bunch of different factors. But yeah, we're just at the point now where the math doesn't work. So just like in the US, where your mortgage went up, doubled or tripled, I think the rates I saw on Twitter just recently, you got some 6s in there, you got some 7s in there. I think I saw a couple of 8s under certain circumstances, and I think there's so many tricks with bank accounts in Australia now and mortgages now. Like anywhere else in the world, you can pretty much get a bank account and it just pays you interest. In Australia, the Commonwealth Bank pays 0% interest, 0.00, and then you have to have like this online saver account, and you got to play this stupid game of like shuffling money around to actually get any interest, and then you got to put your wage in there, and it's going to be paying in every month, and you got to have so many withdrawals per month, and you got to pay the ATM fee. It's a joke, right? You have a bank account in the US, and it just pays you interest, right? yeah, that's it, right? And it's the same with mortgages, right? So you see these teaser mortgages, what have you, and then you read the fine print, and you've got to like have your savings account with them and this, that, the other. And it's always, So when you actually get down here, if you don't want any of that and you want to figure out actually how much is just a mortgage, right? If I don't want to move all my banking to you and, sign over your firstborn son and, this, that, the other.
It is not the headline.
It's not, and I think it looks like it's, 7 8s, and who knows where it will be after today, right?
I want to get to how this ends because the death of the Australian property market has been called before. I remember John Hempton in like the mid 2010s did that tour of Western Sydney, and they pretended to be a couple, and they'd go and they called a bubble band.
With Jonathan Tepper.
Yeah, that's right.
Yeah,
I think
very in perception.
You had a article calling a bubble
2017. Yeah,
and we've got a good mate, Joe Walker, who I think you might know, but he's been calling bubbles for years, and. You probably, none of you are wrong. It's just that the property market keeps powering on. So how does this end?
Well, the lesson, It was a great time back then, 2017. I wrote Australia's economy as a house of cards, and I know John Hempton quite well, actually, his brothers. He was running around with Jonathan Tepper, who has studied bubbles around the world, from the tulip bubble in Holland in, was it 1400s or something or other. And he said, Australia is the only housing market I know where they auction off middle-class houses like fine paintings. Like to an American, it's a bizarre thing where people turn up to an auction and what is this? And everyone gets excited. Now, congratulations, you've outbid and paid more than the other guy, right? Like, it's insane. And at the time, I pointed out how insane it was, and the numbers just weren't working. But continued government intervention, you can kick the can down the road a long time. It turns out, a very long time, far longer than you might think. And they've done that with variety of policies, and they've done with historically low rates. I mean, the COVID was unpredictable, and all the immigration and this, that, the other. But the answer to all of this, where does it end up, is maths, right? Maths eventually comes in, and maths doesn't work anymore. And I saw this week talking about transportation costs. There's an article, I can't remember which newspaper it was in, and it said, tolls have gone up, and you got petrol, and you've got this, that, the other, and it said the average cost of transportation in the average household budget now is 15%. Okay, well, if that's 15%, and it's 62% to service the mortgage, right? Then how much is left to eat, right, or do other stuff? And pay for school fees, healthcare, and just all the normal stuff. People, and you eventually run out of money, right? And you can pump new people into the economy as much as you want from overseas, but I just don't think that the maths works out anymore, right? Because we're not bringing in. There are a lot of millionaires that do move to Australia, but I just don't think the math works, and so people can take the pain for a little while, and then eventually things break. And I think the thing I see. It's amazing. You can look at the GFC with the adjustable rate mortgages tripling and so forth. You look at what's happened with our fixed rates. So this is $350 billion this year of fixed rates mortgages reset. This quarter's the quarter. This is the June quarter. I think it's like 17% of all fixed rate of that $350 billion resets this quarter, 15% next quarter. And they're not resetting 10, 20%. They're resetting 200, 300% plus. So then you look at, in America, what's happened recently in the banking sector with Silicon Valley Bank. So I was actually over in Canada at my office in Vancouver. I was trying to take a couple of days off in between to go skiing. Of course, every time I try and take some time off, something blows up around the world. And what blew up that day was Silicon Valley Bank. Now, Silicon Valley Bank is one of the largest banks in America. It banks 50% of the tech sector in America, and business was great. So its deposits tripled in 3 or 4 years, right? It's like $180 billion of the deposits from 60, something like that. What had happened and what causes banking crisis in this bank where business was going really, really well, because you had this big boom in tech. People are raising, these startups are raising more and more money. You had this whole unicorn phenomena. People are now talking about, I raised a seed round of 50 million US. Seed? That's not Series A or B. That's Series Z, right? What is seed round of 50 million US?
It's nice if you can get it.
You're just flexing now. It's my seed round, don't worry. It's 50 mil. And you're lazy 50 behind the couch, right? So they're raising tons and tons of money. And then Silicon Valley Bank had all these deposits and was trying to figure out what to do with it, right? It kind of ran out of things to lend money to. There's only so much money you can lend to startups, especially cash burning startups. So what did it do with the money? It bought mortgage-backed securities. So it bought $82 billion US of mortgage-backed securities and some T-bills, and at an average yield of 1.56%. Now, when the Fed hiked rates to 5 from basically zero, why would you want to hold a 1.56% 10-year mortgage-backed security when you can get at call, you can go to a US bank and get 3% in your deposit account, unlike the Australian banks, which pay you 0.00, right? And you got to do this shuffling around and need an accountant to move your money every month to kind of extract some of the yield out of the account, right? It's a joke. What happened was, in May of last year, you had a bit of a tech wreck, right? So it started with the crypto crash. I was an adjunct professor of cryptography for 14 years at the University of Sydney. I mean, this whole crypto space has been just fraud all the way through, right? I mean, Bitcoin is a fantastic invention for sending money overseas without government intervention, but it's never been a store of wealth, and all this hot money has flown into it to try and figure out how to shuffle money around the world, whether it's hot or extremely hot money. And in fact, at one point, 98% of volume in Bitcoin was money getting out of China.
Oh, wow.
That's where it went after the casinos stopped working. You used to go to Macau, get your money out of China through Macau. Then it was the Australian casinos and the British Columbia casinos. When that stopped working, it went to Bitcoin. And then China cracked down on it, right? And then they tried all these smurfing things where they would send money, $50,000 at a time, under $50,000, just under the limit, to banks in Hong Kong, and then try and extract it all out to go buy an apartment in Sydney or what have you, or Melbourne. So it's exactly what they did, right? Like, you laugh, it's exactly what they did. So you look at Silicon Valley Bank, right? So they put all the money into mortgages, and then crypto crash happened because, surprise, it was just all, every scam you had before the markets got regulated, over the last 100 years, came back and got reinvented. Painting the tape, walking up prices of things, like the NFT market. Monkey JPEGs. Who ever thought that was a good investment? Like, seriously? But everyone lost their minds, right? Because what was happening was a few people were painting the tape. I sell it to you, you pass it to you. You pass it around in a circle, just walking the price up. And eventually some stupid NBA basketball or Paris Hilton comes along and buys the monkey JPEG and, hey, I got a receipt. Look, I've sold it. What have you. That's how I got my hot money out from my drug cartel in Colombia or whatever, right? Or Bondi Beach. So if you look at Silicon Valley Bank, crypto crash happened, tech crash followed that. VCs withdrew funding massively. That led to a big cratering in technology stock prices, and then the startups are cash burning, right? Because they're not profitable yet, otherwise they go public or what have you. So the bank balances at Silicon Valley Bank were being drawn down further and further and further and further. And it was a bit deeper and a bit longer than Silicon Valley Bank expected, and they put a bit too much money in these 10-year mortgages. Now, if the startups wanted to wait 10 years, they'll get their money back. Yeah. But in the short term, they had a bit of a duration mismatch. They had to kind of sell these mortgage-backed securities to let the startups withdraw cash. And it's kind of funny, actually. It got to a point where they're like, we have to kind of sell all our available to sell securities. So they dumped that security book, and they lost $22 billion. And there's a lot of commentary in the leading up to that gee, this looks a bit risky. Silicon Valley Bank could be in trouble. And I remember I'm in a group with all the top tech CEOs in the country, and I was like, guys, there's no way they're going to let Silicon Valley Bank fall over. This is such a systemically important bank. There's just no way. I mean, just mark my words. I'm skiing today. I've finally taken a day off. like the VCs will come out today and they'll all say, we stand behind Silicon Valley Bank. There's money available, et cetera, and so forth. We unite. It's so important, what have you. 10 minutes later, Peter Thiel, get out. Then one of my mates forwarded an email from Union Square Ventures, get out. And then Founders Fund, get out. And I was like, and you should have seen it in this group. Everyone's like, like get out. And there goes my scheme. And it was just like, it was just insane. And of course, that led to a solvency crisis. And then effectively, the Fed had to step in and go, well, we're going to guarantee not just the 250 grand, we're going to guarantee all the deposits, right? And of course, with Silicon Valley Bank, it's quite pronounced because the deposits were large, because startups held, $50 million deposits. Now, you look at Australia. So you look at the Commonwealth Bank, right? And this is bigger than Goldman Sachs. And, the financial results look pretty good, right? And Australian banks are essentially better run than other banks around the world, right? So it looks hunky-dory, it looks great, right? But if you look at one side of their book, which is their assets, right, it's all $639 billion worth of residential-backed mortgages and $150 of business loans, and businesses are not doing so well. So the business deposits have been dropping, right, and there's very little in terms of consumer lending. It's like $17 billion. And then you look at deposits, and deposits have been doing pretty well. Why? Because we're bringing in a Canberra-sized population of people every year that need a bank account. And where do you go? You go to the Commonwealth Bank and ANZ and so forth, open a bank account. So it's capitalising the banks. And the banks are in a much better place than they were in the GFC. In the GFC, they were insolvent. They were totally reliant on overseas funding, US funding. And then when that freezed up, they were basically insolvent, and the Australian government had to come in and lend the AAA credit rating in order to guarantee the borrowing, and that unfroze it. So they've now got I think 75% of their mortgage book or loan books is covered by deposits, so they're definitely better capitalised than the GFC. However, look at Silicon Valley Bank, look at the Australian situation. In the GFC, and also look at the GFC. In the GFC, you had a problem with default correlation, where you had a recession. And in Australia, the 2-10s curve is yield curve is just inverted, which is a signal for recession. And in a recession, people tighten up spending. People lose their jobs, and you have loans get defaulted on. Australia is at the point now where people can't afford their mortgages. They can't afford to rent. They're all in rental stress. 70% of New South Wales citizens are in rental stress. Interest rates are getting to a point where the math doesn't work out anymore. So could you have a mass default correlation event, even though the bank's been done pretty well, and by global standards great, and market cap bigger than Goldman Sachs? Could everyone suddenly, at the same time, in a correlated fashion, not be able to pay their mortgages? And at the same time, if times are bad, could the cash deposits get drawn down just like at Silicon Valley Bank? I think it's plausible.
If that's the thesis, and you can definitely see it, I guess, do you have like a time frame on how, we were talking about in 2017.
Yeah, I know.
And it's just one of those things. It's like
if
you've got people talk about this mortgage cliff and it's coming, it's going to affect people. I think in the grand scheme of things, you said it's 17% of all mortgages are going to have this cliff. Like it's not like 60% of Australians are going to experience this. So how do you put a time frame on something
one
like
third
this
of Australians are
playing
not affected because they own their own home, right? One third have a mortgage and 1/3 rent. Look, I think the thing about now that just when I watch that movie Big Short again, it just resonates is the rapid reset of those exploding arm mortgages, right? And right now we've got a rapid reset, and it's not a 10% increase, 20% increase. It's 200, 300% plus the reset of your mortgage. And people like to feel wealthy when they borrow money. They think, oh wow, you go read the Herald or Telegraph, and it's unemployed train driver earning less than McDonald's workers now has a property portfolio of $40 million worth of houses, right? Like, like people love to borrow to the gills and makes them feel wealthy. They own all this property. Well, they don't. The bank owns it. And a mild change in interest rate and you're gone, right? Yes, there was extreme leverage in 2017 when I wrote the article, but now you've got a rapid reset of a major cost, and you've got inflation at a rate that it wasn't at before. Things just it was bad. Things got more and more expensive. And friends would come visit from overseas, come to Australia and go, gee, lots of things are expensive here. This is kind of ridiculous, whatever. But now it's the point where it's just insane. $70 for a steak down the pub. They have to be taking the piss. What's next? Is
to answer your question, Bryce, when it gets to $100 a steak.
Yeah. So asking for a friend then, if they're looking for a house, what would one be doing? Is it just a sit and wait? Well,
I see. It's just a crazy market in terms of housing because, first of all, there's very little transparency on what really is going on. So on one hand, you'll hear a narrative that, some house prices are falling 20% from the peaks and blah, blah, blah. On the other hand, you see these ridiculous prices. And it's just very hard to get a picture of actually what really is going on. REA is about 74% of News Corp's market cap. Domain's about 34% of Fairfax's market cap, at least when I checked it last, right? So it's not in the best interest of the media to tell you housing market's stuffed, right? It's just a very hard thing to get a proper picture of what's going on, and I just the maths now, if you add it up, right, you add up what percentage, the average mortgage, and what percentage of household income goes into that, and what goes into transportation and energy. Australia's raised prices by 25%, and you add all the costs up, where's the money going to come from? It's going to draw down savings, and they've been unlocking super. During COVID, you could unlock super, and one of the reasons you could unlock super was to pay off your home loan if you're at risk of losing your home. Yeah. Now, on one side, the libertarian in me might say, well, it's your money, so you do whatever you want to do with it, right? On the other hand, well, maybe stupid thing to do. And I think another telltale sign is you go look online now on REA or whatever for places to rent. And I was pretty amazed. I do a browse through, and you look through Paddington, and it's like, 8,000 a week, 9,000 a week, 10,000 a week, 12,000 a week. I'm going, what the hell? These are not amazing houses. These are just your average whatever house. But I think the telltale sign is you look at them, and half of them are fully furnished, and they're not furnished as in for rental. These are premium furnishings. So it's obviously someone's moved out in a hurry because they can't pay their mortgage anymore, and they're like, shit, can someone else pay this? And that the math works out that that's how much they have to pay, and no one's going to pay that. No.
Yeah.
It's so. So I think you could have default correlation. You could have same as Silicon Valley Bank. You could have cash balances being drawn down. You could have people not being able to pay their mortgages all at the same time, and you've got a massive reset of rates, and at the same time as pretty much out of control inflation. And if the RBA is not game enough to temper the inflation, and typically, if you want to stop inflation, the policy rate needs to be above inflation, right? Typically, you've got a thing called the Taylor rule, which you can, some people look at. But intuitively, if inflation is running at 7%, why would you keep your money in a bank account at 4%? Because you just want to spend it. You maybe buy a house or what have you to try, because you're going to build some wealth. And that's been for 61 years. It's been a phenomenal trade to buy a house and own a house in Australia, right? But if inflation's at 7, what rate do you need the bank paying interest on in your savings account to kind of pull that back? Yes, you can make mortgages completely unaffordable and tighten up lending practices, which is happening right now. But you also need to attract people to put money into the bank account, and it's kind of weird when the major banks pay you zero. Yeah. They literally pay you zero unless you go open a second account and then you got to shuffle around and this and the other. Australia had this. This is not the first time it happened to Australia. In the 1800s, I think it was 1851, we discovered gold in Ballarat. A huge number of migrants come to Australia to seek their fortune with gold, gold mining and so forth. And we had a big property boom as a result, because there were a lot of people and limited supply of houses, and you had a massive property boom. And it was in Sydney, Melbourne, it was exactly the same, right? Like, house prices just went through the roof, land prices went through the roof, and then they had a banking crisis. And in 1890, you had some contagion with the banks, and they all had to kind of shut for a little period of time and so forth. And it took 70 years, if you bought at the peak, to make your money back on the house. 70.
That's scary.
I know. Oh, no.
70.
That's the rest of our life if we're lucky.
Yeah.
So we're going to include...
Longer NASDAQ.
We're going to... Well, I think it's worth... Like, people will be listening to this and getting scared, if you're in Australia, your job and your salary is tied likely to the Australian company or the Australian subsidiary you work for. If you want to buy a house, it's in Australia. But the stock market gives you an opportunity to buy overseas markets in overseas currencies. And that's an important thing to remember. Or you can just go and buy gold.
Yes.
But Matt, we want to... so we'll include the full transcript to your speech in the show notes if people want to read it. And I would recommend reading it because it's a good read. Very well researched and quite funny as well. In the audience when you gave this speech were some heavy hitters for New South Wales. I believe the Premier, Chris Minns, was there, or he was...
he spoke after me, actually. He wasn't there when I was speaking. He got a full brief.
I'm sure he did.
I'll tell you a funny story about that, actually.
What was the reaction? Yeah.
Well, I'll tell you a funny story. So I was actually asked to give this speech last year at the same conference last year. So it was originally scheduled to be held much earlier on. I was kind of surprised and interested that they kind of wanted me to be the opening keynote before the Premier and before the ministers and all the Productivity Commissioner. I thought the Opera House Australia CEO. What I thought, okay, it's kind of interesting, I guess. And I spoke to the conference organizer and go, well, I've seen you do keynotes at other conferences, and you certainly make the conference more exciting. So people talk about it, and there's this debate and
put it this way: we would have had no idea that SMH put this conference on if it wasn't for your speech.
Well, they deep sixed it. So I tell you what happened. So they asked me to be the opening keynote, and I actually thought about I actually talk about my article. I thought so in the transcript I said, I thought, why should I do this opening keynote? Why me, right? Like, how am I relevant to this, right? I mean, ages ago I did write a few pieces on other issues. Yeah,
on the lockout, and I think people will be familiar.
I wrote a piece called "Would the last person in Sydney please turn the lights out" in 2016. Now, I was again skiing in Canada when that happened. And I kid you not, I was just there going, oh, should I write this or should I not write this, right? It's all about the lockout laws and what actually was really going on. Because back then everyone thought, oh, Australians, it's because we can't handle our alcohol and it's because we're violent. And that's why toxic masculinity, right? I was like, that horse shit, it's nothing to do with that. It's again about property. Yeah. It's about the $20 billion, I think at the time, property portfolio in Woolloomooloo, which is all housing commission, which is the most amazing location for property, but you can't clear that out and build apartment blocks while you've got King's Cross there. So let's build a new zone in Barangaroo. We'll zone it 24/7. We'll move the nightlife there. We'll make up some fake health and safety crisis. We'll fund a few non-profit groups to go a bit crazy or whatever, and we'll get the media to kind of chime in so they can pretend like they're relevant. And what we'll do is we'll just rezone all this area. We'll make all this money on apartment blocks and then subsequent taxes, and we'll just move it, and it'll be a nice nightlife anyway. Of course, that was the plan. It didn't work like that, and I was there going, should I actually write something to kind of explain what's going on? Because today in the media, it's all 500-word articles because they're driving the Google ad click machine. So you just need to have a headline. I stumbled across a blind dog, and you wouldn't guess what happened next. And kind of click on the headline, and bang, they get some ad revenue, right? So I was in Canada skiing, and I thought, should I write this or not? So every day after I'd ski, I'd sit in the jacuzzi for an hour, then write a little bit, and do it again and again. And then eventually I got to the end of it, and I said, should I publish this or not? My friend goes, oh yeah, do it. And by the way, here's a list of ministers you should send it to. He's in the Liberal Party. Here's a list of Liberal Party ministers and so forth. And I said, should I see emailing? He goes, yeah, crazy people email all the time. Don't worry about it. So then I ended up emailing all the ministers, both sides and so forth. But anyway, I woke up the next day and on LinkedIn, I was an influencer, one of the 100 influencers globally. And it got 1 million reads in 2 days. Wow. And then on the Wednesday afterwards, 16,000 people marched. Yeah, so that was a bit crazy. Anyway, so I thought, why would I be relevant with this? I don't know. It was late. I was trying to go get a meal, and I went down to Victoria Street. We used to have all these cafes and restaurants down in Victoria Street. I thought, I'll get a meal. And it was about 9 o'clock, and I went into Tropicana. I thought, can I get something cheap and cheerful? Sorry, kitchen closed. Walked down the street, kitchen closed. Uma's closed. Everyone's closed. I thought, oh, shit, I guess it's Betty's Burgers and up at the Poo on Sticks. So I'll go and have a Betty's Burger. I went in there and I go, okay, can I please, sorry, kitchen closed at like 9:11 p.m. And so then I thought, I was so frustrated. I thought, this city is like maximum difficulty. Like I swear it was 10 o'clock that the restaurants used to close. Now it's 9 o'clock, right? This is ridiculous. So I tweeted, what does it take to get a meal in Sydney after 9 anymore? And the answers were hilarious. It was like an alarm clock so you wake up earlier, or a taxi, or kebab or Macca's, or a sledgehammer. And the best was a time machine back 15 or 20 years. And I thought, you know what? Maybe I should do that keynote. So I said I'd do it. But then I think Perrottet found out about it. Now, I didn't mind Perrottet at all. I thought, I actually thought, he's kind of a weird guy because he's very, very, very religious. Then at the same time, he's a libertarian, right? So he's the guy that came in and said, okay, well, we'll just get rid of the vax passports and all this sort of stuff and open things up. So I thought it was actually pretty good. But apparently he said, if Matt's speaking, we'll have to wait till after the election. And then he didn't get in, and then Chris Minns got in. So in the So anyway, so I was there. I was at the conference, and I came in and gave the talk, and of course went off the reservation basically. Yeah. And there's a video of it actually. There's a recording. Surprisingly enough, Fairfax was not recording the conference, which is strange for running what I think was a reasonably important conference. So my comms guy just flicked his iPhone on the table and just recorded it. It was quite funny because 1/3 of the audience was just in hysterics the entire time. 1/3 was like, should I laugh or not laugh? I feel very because it's $1,300 a ticket, so it was all consultants to the government and this and the other, and they weren't quite sure what to do. But you see them smirking and nodding their head furiously, and then you had 1/3 in sheer terror. I was like, what is going on? You're not supposed to say this. And I was trying to get a reading for what Bevan and Michael, the journalists, were thinking, but I think it was very clear after that was it, not writing about this conference at all. So they wrote, there's 2 articles that came out entirely from the entire conference. One was that Chris Minns said we should build more apartments going up, and that's how we'll get the housing supply going. And then another article was on Australia. Sydney is overlooked for food.
It's overlooked?
Because food's great, and food is great. It's overlooked for food. Even it's $70 a steak.
Yeah. Food is great. It's just expensive and obviously not open late enough.
Yeah, correct.
Jeez. Well, Matt, unfortunately we have run out of time, but it's been an enthralling conversation. We've certainly, I've certainly really enjoyed it, and I know that a lot of our community will have taken a lot out of it. You've left us with a lot to think about, including me, because I'm sitting here in the midst of all of this just being like, what is going on? It's just so hard, as you said, to get a read on the market and how things are actually panning out. But we do have one final question. Every expert that comes on the show is automatically entered into our Expert of the Year.
Oh, God.
And it's an opportunity for our community to just celebrate those that come onto the show and help them in some way, shape or form with their investing and money journey, and to help them vote at the end of the year for the expert. If you can let us know where you would put the nice gold trophy or glass trophy, it's not exactly that one, but it'll look something similar. Where would you put it if you were to win it?
Where would I put it?
Yeah.
I'd fill his ass.
Yeah, that's the best answer we've had so far.
Wow. If you don't win, then okay, nice. I'm glad we asked that question.
That's great.
Much appreciated, Matt. Thank you so much for taking the time. Very much looking forward to having you back on at some stage and getting a bit of an update on how you're thinking about things. Very much appreciate it.
Thank you.
Thanks, Matt.
You have been listening to an Equity Mates Media production. In the spirit of reconciliation, Equity Mates Media acknowledges the traditional custodians of country throughout Australia and their connections to land, sea and community. We pay our respects to their elders past and present and extend that respect to all Aboriginal and Torres Strait Islander peoples today. This podcast is intended for education and entertainment purposes. Any advice is general advice only and has not taken into account your personal financial circumstances, needs, or objectives. Before acting on general advice, you should consider if it is relevant to your needs and read the relevant product disclosure statement. And if you're unsure, please speak to a financial professional. The hosts of this podcast and their guests may have positions in the companies mentioned. Equity Mates Media operates under an Australian Financial Services Licence 540697.